Hey guys, hello. So today we would learn building blocks of capital expense planning, which is part of your enterprise planning and budgeting module. Today I'll just give you a high level overview. What are different component and features CapEx has. Mainly I would be focusing on key terms and definitions. In a subsequent session, I'll show you how to um, map all these keywords and definition with your application design. The next session I'll show you dimension structure of CapEx. So let's get started with the formal definition of CapEx. Why do we need capital expense planning? So capital expense, the name indicate when you buy a house in your household, it is like you're buying a capital. But the buying a house is for personal use. The same thing happen for a corporate. When they buy machinery, equipment or office space, they are considered to be as a capital. So capital or the money which is spent in order to procure any asset, it is considered to be a capital expense. If you go by the formal definition of capital expenditure, is the money that is spent to buy, repair, update or improve a fixed asset of a company, such as building, business and equipment. So buying a fixed asset or capital asset for any organization is a big decision and require extensive research and needs to justify with the business strategies. So buying an asset is really makes sense to the organization. Therefore, it requires a very strategic approach. So capex is different from your day-to-day expenses. So day-to-day expenses are called operating expense or OPEX. So if you buy a grocery item for your monthly, you pay your kids' fees. This is called operating expenses. Whereas buying a house is a capital expenses. Similarly, in a corporate, they capture operating expense under their income statement, often referred to as operating expense or OPEX. So anything which is pertaining to day-to-day business operation are considered to be as an operating expense. Like you're spending money on advertisement or you buy a toner cartridge for your printer, it is operating expense. The major difference between CapEx and OpEx. CapEx, as I said, is a big decision and it has one time cash outlay and it is not recurring. Like your office rent payment or your house rent payment is a recurring expense, right? And it has a long term, it impacts a long term asset. And therefore, before organization plan to procure an asset, there's a forward looking mechanism is used where the department head or whoever needs an asset required to go through proper justification and justify that there is a need of buying an asset and which is contributing to the organization. So that's something that cannot be deducted in a full year. So when you buy a capital asset, its life cycle is often more than 1 year. So graphically presented what may consist of capital asset, it is machineries or factory, office building or vehicle or maybe hardware which lasts more than 1 year. So a couple of example of capital expenditure and OpEx expenditure or revenue expenditure. Payment of expenses, item loss which is less than 1 year. Important. So when you talk about capital expense, you also talk about depreciation. We talk about useful life of a capital. It does not mean after the useful life of a capital, it goes to garbage, but there's certain process being opted. So the useful life of an asset is estimated to the number of years an asset is likely to be used or remain in service for the purpose of cost-effective revenue generation. Once the useful life of an asset is passed, it is it turns out to be salvage value or leftover value of an asset. We will talk about this in greater detail in calculating depreciation. So what if you talk about in the context of hyphen planning capital expense module? So about capital expense planning, we need to create a model of the organization capital expense. We create a model of the organization capital expense. It means you project your expenses. Same thing we did in the past in planning and budgeting. We talked about how do you project organization expenses. But this is asset long-term expense, and it provides an efficient or effective way of decision makers. The ultimate objective of the whole exercise is to enable your decision makers to take timely and business meaningful decisions. And the decision which you take is actually collaborative decision, and it impacts the entire organization. So communicate throughout the request, justification, review and approval. So maybe you are a department head and you plan to buy some new asset. Maybe you are into production and you own one production unit, and one of your machinery is malfunctioning. It is not working as expected. So you need to buy a new asset. In order to buy a new asset, maybe you need to take an approval from a finance department, and different levels of approval may require. And you need to justify that you need this machinery to continue running your business operation. In the whole process, actually we project a business model. So all companies, small to enterprise organization, they create a forward-looking model or forward-looking plan, and that is an objective of planning. The overall objective of planning is creating forward-looking plan to prepare for the future, and your organization strategy should align with this. So you align corporate resources, you align your dollar amount against your strategy. So if your organization say we want to be number one in manufacturing goods for, let's say, ball pen. So the strategy decision of an organization to be a number one in order to produce a ball pen. So all the investment buying of an asset should be in line with organization strategy that leverage competitive market. So to remain the market, to get a competitive advantage, you should prudently utilize your cash and procure asset meaningfully. So this is an important and challenging decision for an organization. And as I said, in fact, the fundamental of planning, the planning is collaborative in nature, and it means it is cumulatively. If I project expenses for my department, I would send across to my manager. He would approve it. He may also contribute his comments. So it's basic collaborative planning process where a different department or people at different level they coordinate together and allocate the expense required to augment the organization capacity. So I would show you this thing live. When you connect to your planning and budgeting, you have you have option to procure new asset. Once you configure capital expense, you have option to uh, procure new asset, retire existing assets. This is a default view. These are different cards and different tags. So every time you procure new asset, there's an option of procure new asset. You have to define various properties and option pertaining to asset. Next to your business model, as I said, when you configure and you buy an asset, uh, maybe the account manager or account controller or maybe your asset manager, you need to define, you can create an asset by defining various parameters of asset creation, asset class, asset type. I already selected asset class. I should have shown you this thing. Asset class, all this asset map to certain project. If you're buying a new office computer for recruitment for your HR department, you associate your asset with the project. So billing would be done against the project. In addition to this, you can, while creating asset, you can define asset class, asset unit. the justification of the asset, priority of its asset based on which action can be taken place, leftover value as part of salvage, which date it is purchased, and other details of the asset. Please watch my video of creating asset to get more information about this. So the ultimate objective of the whole process is to empowering your business users for forward-looking planning and helping them in taking critical business decisions of acquiring asset. It is interesting to see where does capital expense fit into picture into your balance sheet. Therefore, I have taken a graphical the snapshot of balance sheet. You see, while operating expense are the line item of expense category of cash flow. So your operating expense comes under cash flow. Capital expense typically comes under investment in property, plant, and equipment. And CapEx usually require a sizable financial investment. Right? You need a huge money to procure a new office or new office building. For that reason, often needing the approval. So we follow certain approval process of a company, board of director or stakeholder. So if you look at maybe the balance sheet of PepsiCo, I shown you a couple of times. You can look at the balance sheet of PepsiCo, and this is what you find. Oh, not this. Sorry. This is we can see balance sheet of PepsiCo under Morningstar, and in a Morningstar under cash flow, you can find operating expenses, different operating expenses, and in balance sheet you find a note called property, plant, and equipment, and maybe it is further nailed down or more granular detail you find, or you might have a summary information of all expenses, accumulated depreciation and property, plant, and equipment, gross and net. So it is essentially part of your balance sheet. Another interesting thing you should know before to start working into capital expense module, uh, in addition to procuring an asset, where else you need to invest money. So once you procure an asset, you bought an asset, you may need to add more money in asset upgrade. Maybe your asset you have bought a office equipment or machinery, a manufacturing device, but the manufacturing machine is not productive. It requires to be upgraded because it is unable to produce the goods which is required in the industry. So you may need to upgrade, you need to expand its capabilities, you need to add more features to this, right? Or you need to completely renew it. So adding up an asset, the story doesn't end over here. You need to add cost pertaining to any one of this activity. The capital expense, while you work on this, there's an option called existing asset. To maintain existing assets, we have option to define expenses associated to existing assets, right? So you define asset rate, its salvage value, freight, additional charges, and so on. You define various properties. So once asset procure, there's an additional life cycle of assets starts. Uh, Maybe additional charge or tax amount or additional costs associated with the asset. This your CapEx module is designed to cater this need as well. Interestingly, if you know that what are different asset classes you have, and then you can map your this understanding with how application module is designed. So assets are primarily classified as tangible and intangible asset, As the name indicates, tangible asset which you can touch and feel. Intangible asset like goodwill, patent, copyright, software, you cannot touch it. But these are an asset, and it helps organization to grow and generate revenue. So tangible assets are further classified as current and fixed asset, and these are type of intangible assets: goodwill, copyright, patent. Fixed assets in turn have building, machineries, computer equipment. Current asset: cash, cash equivalent, cash in bank, cash in hand, account receivable, short-term inventory. Exactly, when you create new asset, you can define which asset class your asset may map to. So while creating new asset, there's an option to select asset class, and the list of asset class you see over here, this is what you define during application creation. So if you haven't seen how to configure CapEx module, please go back and watch. All asset classes in my case are actually taken from there, although you can add new asset class at later on as well. So you see it is classified as tangible asset and intangible asset. Fixed asset, you have tangible and intangible assets. And finally, little more detail about property, plant and equipment. Property, plant and equipment is a head actually. Under this, various elements. So property, plant, equipment are non-current capital asset. They are non-current, and it is shown on the balance sheet. Just now I shown you of the business used to generate revenue and profit for the organization. And property, plant, equipment, it plays a key role naturally in the financial planning. And often property, plant, equipment are taken directly from ERP system and loaded into your CapEx module. They also analyze organization performance, organization analysis of company operation and future expenditure, especially with regards to capital expenditure. So once again, you go back to your Morningstar, you find a node over there called property, plant and equipment under assets. And these are the property, plant, equipment, net, gross and accumulated and depreciation. The graphical presentation illustrates this simply. Any capital which is more than of 1 year consider comes under this category. This is mandatory to apply this constraint. I have taken one numeric example for the sake of simplicity. So when you go back and write business logic or you test validate your number, you know this how it works. So net property, plant and equipment equals to gross property, plant, equipment plus capital expenditure you did on top of this, and then you subtract depreciation, right? Let's take this example. Does the company own a machinery of gross value 5 million, and the accumulated depreciation is 2.1 million? Because this machinery has some wear and tear expenses. Due to wear and tear of the machinery, the company decided to add another 1 million in order to renew or add new equipment to the machineries, right? So you 5 million and 1 million. For this purpose, for the period of depreciation, the total depreciation recorded for all old and new equipment is 150, right? So we calculate to the ending balance. In order to calculate ending balance, we see the initial cost of acquisition of the of machineries plus an addition on top of this minus all, sorry, this is additional is 1 million, so 5 million plus 1 million minus all depreciation. The total depreciation 2.1 and 150. So the ending balance we get 3,750,000. In addition to this, there, as it mentioned, there is a cost associated to repair and replacement of property, plant and equipment. The CapEx module has a provision to define repair and retirement as well. So this is an interesting thing. You should know where repair and replacement goes into your financial statement. So the nature of property, plant, equipment asset is that some of these assets needs to be regularly fixed. Maybe you have some production machinery which require regular maintenance, or some of them require complete replacement to prevent equipment failure or to adopt a new sophisticated technology. Maybe you need to enhance, upgrade your machinery, or completely discard and bring a new one, or add a new features to this. The general rule of accounting says the general rule of accounting for repair and replacement is that repairs and maintenance are captured under expenses in your income statement, and replacements are captured under asset as capitalized, right? So repair essentially goes to income statement and replacement goes to capitalized under asset. Well, you need not know all this. I mean, you need not do it manually, but it is good you know about it, because when you need to perform unit testing of the data, it's good you know which number goes where. When you talk about capital expense, it is obviously talk about depreciation. As you see in your CapEx module, you can define a different asset class and their depreciation. This is governed by different accounting compliances. So laptop depreciation or life uses life is 3 year. Maybe your office building life is 39 year. So you have different asset class and define depreciation methods. This is defined under assumption, and if all calculation take place in this fashion, your complete calculation take place according to the depreciation method you select. This is all defined under assumption. So I give you a simple example how depreciation take place. So you see in this case we have straight line sum of year digit to depreciation I talk about for now. So straight line depreciation is fairly simple. As I shown in a previous slide, my CapEx module support straight line sum of digit depreciation method, and straight line depreciation is fairly simple. Year over year, you remove or you subtract depreciated value from your asset up till you reach to the salvage value or residual value. So assume with this number 5,800 recurred into your book, maybe some machinery, and the residual value or salvage value of the product is 1,000. So remaining depreciable cost is 4,800, and it is assumed the useful life of this is 3 years. That is a useful life. So 4,800 divided by 3, it becomes 1,600. So year over year, my office machinery or equipment would depreciate 1,600. And how this is recorded under your journal entry, you put debit as 1,600, credit as accumulated depreciation. This is how entry is made in your journal. Sum of digit depreciations, also another way of creating depreciation. So the machinery which you want to depreciate, the base value of the machinery is 225, and it is assumed it has 5 years of life. So you actually sum them up 5 year, and therefore it is called sum of year digit depreciation. When you sum them up, it is 15. 1 plus 2 plus 3 plus 4 plus 5, it is 15, and you divide total value by the year. So 5 divided by 15, it is 33%, right? And you multiply 33% of this. So if you take a one value out of it, how it works? So you take 5 divided by 15, 33 multiplied by 225000. This is value you get 75. Then again you say 4 divided by 16, 15, 2.666 multiplied by 225000, 60,000. So the depreciation take place year over year, and on the other book value is getting reduced. So 225 minus 75, 175 minus 60, 115, and so on until it reaches to the residual value, right? So it continue to depreciate. So finally, you would also find while working on CapEx module the term called asset capitalization. So what is asset capitalization? So an item in the item is capitalized when it is recorded as asset. The item is recorded as asset rather than as expense. This means the expenditure will appear in your balance sheet rather than your income statement. And why does it happen? Look at this interesting example. So when you spend money in your organization or you spend money as salary, the value goes out from your company. It completely gone. You pay the salary to the employee. But when you pay the similar fashion, when you pay utility bill, it also goes out and nothing left with you. But when you buy some asset, on the other hand, when you spend some money on buying asset, all the money goes out, but the value of the money remain with you in terms of asset. But the value remain with the company, and that's the basic idea behind capital asset capitalization. In asset capitalization, in CapEx you will learn the different types of asset depreciation. We can transfer asset, retire asset, or reevaluate asset. Option, you take an existing application, you can retire, transfer, and reevaluate as well. As part of your, when you select your asset, you have option to define the reason of retirement. You can tag it to retire, transfer or retire or sold. This is all you can define. So retirement asset depreciation, you can transfer it out and also put your asset a revaluation. Finally, you would also see, as I shown, you can define asset retirement for the existing asset and transfer, your option called existing asset and transfer. Retirement transfer. Under this you can select asset category and pertaining to project if it is mapped to certain project, or maybe you have no, if your asset may not map to any project. For example, I take computer under no project, then I might find one asset or two asset. Then I can tag this asset to be retired. Then option of retirement. Okay. Um, so it is good you know the life cycle of asset management. Asset life cycle, it often starts with acquire and leave up to salvage value. So asset is counted as when you consider retired, which is actually life state. The asset is counted as retired when it is completely and permanently removed from the service. Asset retirement can occur in process such as you can sell the asset, therefore your option sold in your CapEx module, or you can put a retirement or transfer out. Disposal, disposal due to obsolescence. This is a life cycle of uh, asset. So this is basic keywords and jargons about CapEx. In the next class, I'll show you the dimension structure of CapEx module. Thank you.